Hey traders, welcome to another crypto market update. We got some pretty important news here coming from Russia. They're proposing a law that criminalizes buying Bitcoin with cash, and offenders of this could face up to 7 years in jail. So obviously this is just a proposed law, so they do still have to get it in place if enough people want this to happen basically in Russia. So we'll see how this plays out. We will keep you guys informed, but yeah, for anyone who is watching who may be a Russian citizen, definitely let us know what you're doing. We can get into the article a little bit more, but I will post this within the Discord. So if you'd like to read the whole article, you can go in our Discord and then check it out. But in this video, we're mainly going to dive right into the charts here, looking at Bitcoin, looking at some alts, and then also comparing the relative strength that these different alts that we're going to be looking at has compared with Bitcoin. So this is the 1 hour chart. Let's actually take it all the way back to the weekly chart, which is right here. We can see that the weekly chart, obviously the weekly candle that we currently are on just started, and this key level of around $8,600 we've been saying is the main zone that we're looking to hold if we want any sort of bullish bias. If it breaks down below the $8,500 zone, I'm going to be a pretty big bear, and we'll be looking for continuation patterns to the downside, because in my personal opinion, I think the risk reward is favoring a potential downside move within this triangle. What do I mean by that? Well, if we are looking at this triangle in assuming that it will continue to respect until we do have a key breakout, the point in which we have the maximum amount of resistance is not too far away. It's right here, because this is the outline structure of our symmetrical triangle pattern, which is an extremely well-respected macro pattern that we can see on this chart. And then the maximum area that we have demand, where we have the higher lows, is going to be right here, where we have the anchor point, 1 touch, 2 touch, 3 touch with lots of wicks here, and then we have a potential next major level of demand. So the space in which the price has to move is a lot greater to the downside, where it has the least difficult path of resistance to some degree compared to going up, because then that means we have to be breaking our key level of resistance. So in terms of just the technicals, the path of the least resistance would be to the downside to continue the squeeze that is formed from our symmetrical triangle. At one point, we will have to break either to the upside or downside, because the squeeze has an inevitable end, and I do think that we will go to the upside, my personal belief, but there's a lot of room that is still left in this triangle if we do get some momentum to the downside, and that's why I think that risk reward is a little bit more favoring the downside compared to the upside. Now, the moment in which I would shift my bias and assume that the risk reward is much greater to the upside compared to the downside would be if the price breaks above this structural outline that we call our resistance. If the price breaks above this zone, the risk reward is now skewed, because I'm now looking long. Let's say I want to enter long. My risk is going to be below the previous low, so probably right around here. Let's say 77. If I can get a little tighter, that's great, but that would be generally around where my risk would be. So then if we do get wicks to the downside, I'm not going to get wicked out by any little moves to the downside. And then the reward would obviously be a lot greater compared to the risk. So that would make sense. But until we actually get above this zone, you are longing into an extremely valid, respected resistance. So that's my thesis as to why I think that there is a higher probability of a risk reward that is greater to the downside compared to the upside on the weekly chart. And this is all predicated on the fact that if we do break the $8,500 level support, that would then create a shift in the market structure, creating a significant lower low. You'd be looking for the exhaustion phase after that impulse move. Every impulse move, or if a key area breaks, that is an impulse move, because it takes a lot of strength to break major zones. So we would be looking for a break below the $8,500 level for a major break to the downside, and then you're looking for a continuation pattern, which is an exhaustive move after the impulse move to the downside, breaking the support, and it'd be a contraction in volatility, because like market breadth, where you have impulse and corrective moves, volatility works in the same way, where you have contractions volatility and then massive aggressive impulses that create expansions in volatility. And this is the type of thing that we're going to be looking for. So that is the weekly chart. We still got obviously potentially a long way to go until our apex is kind of coming to almost an end, but at the end of the day, we could just poke out right here if the demand is really there. So we don't want to jump in too early for any shorts or longs, and we're in a pretty vital zone where it's deciding either to go back into the triangle, in which we could gain some significant risk rewards if we do look at some shorts, and then we'd be waiting for the price to break this key level of resistance if we are looking for a long. That's the structure on the weekly chart. Now let's get into the smaller term time frames. This is now the daily chart, which is also a really, really good time frame to be looking at. Let's get our snip and let's just discuss what we can see right now. I'm going to get a little bit of water and then we'll continue on. All right, so this is that $8,500 zone that we talked about. Let's just make this line so it's a little bit easier to see. This is that key level of support that we were talking about, $8,500, and you can see it's basically creating a nice little structure, a rectangular zone right here. This either could be a option number one, a volume reaccumulation phase, where we had some level of volume accumulation phase right here or right here, and then we broke to the upside, and this would be a reaccumulation phase, so it's reaccumulating buyers, and once it's collected all the sellers or all the asks within a certain amount or a price range, then it has to go above the previous high in order to gain more asks to purchase the coin or purchase the asset, whatever you're looking at. So that's option number one. Option number two would be a volume distribution phase, where this was the market phase. We've already had the volume accumulation phase. That was the solid push to the upside. And now this is where sellers are located, trying to distribute the coins that they bought at the low, and they're wanting to get out before the move to the downside without impacting the price too much. So that's going to be the two options that we currently have, where if this is the reaccumulation phase, option number one, we would be looking for a bullish move, breaking that $9,900 level of resistance, moving towards the upside, continuing the trend, continuing the breakout, and getting demand from this global macro environment that Bitcoin's pretty well suited for. That's option number one. Number two is going to be the move to the downside, in which I do still think that in the global macro scheme of things, Bitcoin's extremely bullish. But on the short term, I do think that there could be a possibility that we would get a sell-off if it breaks this 8,500 level. And why is that? First reason, every single person in May has that longed is now in red, meaning that there's going to be a significant portion of traders, investors who are now in red, who are fearful. If there's any more movement to the downside, there's going to be fear in the market, and there may be some weak hands after the halving, because we do remember the halving was like somewhere around right here. So we know for a fact that there was a lot of people who FOMO'd in after this massive pump and are in the market with this $8,500 level as a key level of support. If it breaks, that's a big loss in confidence. If it breaks, we are still going to be talking about the potential minor capitulation that could come into play, because I don't think that's something to completely ignore, even though we haven't seen that much sell pressure come into the market really. We've seen a nice consolidation where we see a series of highs and lows continue sideways, but if we do start to see the momentum go to the downside, we could see it spiral pretty quickly into something that could be a pretty harsh sell-off. So let's now talk about the previous Bitcoin halving, what happened, and then what we can learn from it, and then let's look at what we currently see for the halving. So let's go to this guy right here. That's the current halving. Let's first go to the previous halving, which is all the way back in 2016. Oh, it's loading. Let me give it 1 second. All right, sorry it took a little bit longer, but here it is right here. All right, so this is the 4-hour chart, not perfectly zoomed in, but obviously we can see, just like the previous halving, the amount of US dollars it takes to produce one Bitcoin shot up the moment the halving occurred. In other words, the revenue that you received for the unit of expense it costs to produce one Bitcoin basically halved. And that's basically what it is the revenue for the miners gets cut by 50% in each BTC halving. And that's exactly what we saw right here. So we don't really have a whole lot of data pre-halving, but we know that there was around an 80% move to the upside. So let's just draw it in for fun to kind of get a good understanding. So let's say we're kind of like somewhere around here. I think that's a good area. So we're getting a little bit move up. We get big spikes, and now we're consolidating. Let's just say something sort of like this. It was probably an 80%, maybe, yeah, somewhere around there. So let's just say that is how it looked pre the halving. Sorry about that. So what do we get after? The main thing we want to be looking at is the momentum of the market. And you can see that very clearly by these trend lines. So let's take a picture right here. We see our first trend line before the halving, and we actually see this pretty similarly. Halving event right here. Don't obviously see much happening at that exact point in time. And then you create a less ascending support, and then you break that. So the first one breaks aggressively, pretty ascending. The second one breaks less aggressively, but it's still ascending, and then the last support is even less ascending, but it's still ascending, and then you get a break in the support there, where you're getting breaks in supports. You could say that these are all somewhat flags or ascending wedges, like there, something along the lines of that. But it's pretty bearish, where you get aggressive pushes to the downsides and slow climbs up. That's pretty bearish, and then once you break this major support level, you get an absolute capitulation. So let's just clean this up a little bit more. You understand the structure that I am looking at. Once you break this horizontal level of support, you see it right here. You see it right here. That was a key level of support we can see back in 2016, which is like around 627-ish, somewhere around there. And then once you see the price actually break this horizontal level of support, you get a little correction, but from where it actually broke out to the low is around 25% move, which is absolutely huge. In terms of if you leverage twice, 5 times, that's an absolute monster of a move. But something to note, it goes very, very quick. In that same 4-hour time frame, we got the price to come back all the way and close around 12% from that breakout point. So it basically went 50% retraced from that low we got of 25%. So what we can extrapolate from this is the fact that in these major market sell-offs, like we've been talking about, after the halving, when the market does look like we could be seeing a bull run here, like in my opinion, we're seeing right now, this is an opportunity for short sellers, but we have to be quick. We have to be able to utilize some different order types in order to capitalize if we're not able to sell and if we're not able to be in front of the charts. So one type of order is an OCO order from Binance. One cancels other. You can also just do limit orders, take profits with derivative exchanges. If you are using derivative exchanges like Bybit, it is extremely easy to set take profits that will automatically take your profit off the table if the price gets to a certain level. I'd highly suggest it if you are not available to be on the charts for the majority of the day. So now that we understand what happened in 2016 in the previous halving, let's now look at what we're currently seeing within the market once we have a good understanding of what went down last time. So let's go to auto and let's go to the current price action that we can see right now. Same thing we saw pre-halving. Cost in total to mine one Bitcoin was around 7,900, and right after the BTC halving, it jumped all the way to around 15,000, 16,000 US dollars to mine one Bitcoin. The hash rate, the difficulty, has not really adjusted at all, and we're seeing a slow decrease in the mining difficulty, but in my opinion, I do think we need some level of a capitulation in order to kind of cull the inefficient miners in the network, in order to create an environment in which there is a very reduced amount of supply getting dumped into the market. And that will create the bull run that everyone is looking for, in my personal belief. So obviously it's just a thesis, but when we are looking at the price action, we can see it's somewhat similar to what we saw last time, where you saw our horizontal level of support, which in this current structure is $8,500 when we're looking at the current price action. So this right here in the previous halving was the $8,500 zone, in my personal belief, and we're drawing some nice ascending trend lines that are getting less ascending. You're getting weakening from the buyers, and once you break a certain point, you'll get some level of capitulation where the psychology of the masses will change when there's going to be a lot of sellers in the market trying to exit BTC. And I think that's going to be around the $8,500 zone. I really don't think it's going to be as aggressive as this, because this is unbelievably aggressive. Like, that's another level, especially because this is a different market altogether, basically, with how far it's gone in the past 4 years. There's a lot more demand, there's a lot more awareness, and there's a lot more, not just retail traders, but also you see people like Tudor Jones, who is advocating on having some percentage of a portfolio in BTC. So you're seeing these large hedge funds, these very well-known individuals in the finance space turn to cryptocurrencies in order to hedge against inflation, hedge against this currency proliferation that we are facing right now. So I don't think it will be that aggressive, but like I said, if we are looking on the weekly and we are looking on the daily, we still have a decent amount of ways to go in terms of possibilities to the downside. And it doesn't mean we're going to stay there, but I think some level of a base, I think, would be very, very healthy. So like we saw back in 2016, after that massive move to the downside, we were able to form a very, very strong base. So let's just take this off. What did we get after? Let's just get our snip. So after that massive capitulation, we're able to hold a series of lower lows and lower highs. Kind of like, let's just draw that in a little bit better, where you get a high, lower high, lower high, lower high, and then you get this nice horizontal zone. You could suggest that it's a wedge, but at some level, it's just going to be a horizontal zone kind of around here, and then a descending zone, create a descending triangle. That's a pretty good, solid base, if you ask me. And then what really separates it is you get one wick right here and another wick right here. That is signifying that there is a ton of demand that is able to push the price back up, because there's a lack of supply due to the capitulation, and the supply that is introduced into market is now going into the hands of the miners, who are able to continue running operations almost no matter what. So they have some relations with government entities or electricity companies that are able to provide extremely cheap electricity or something along the lines of that. And you can see the culling of inefficient miners from the difficulty and the cost to mine Bitcoin going down. That means it costs less to mine Bitcoin, which means the hash rate is reduced, which means that the difficulty is less difficult to mine Bitcoin. We can see that by the decreases right here. And every single time this increases, the difficulty and the cost to mine one Bitcoin increases. And we haven't seen a decrease in the actual production cost, really. So in my opinion, I think we do need that sell-off in order to kind of create an environment in which there is a very reduced amount of supply, which will then create a lot of demand for a few Bitcoin that are selling, which will drive up the price exponentially. So in terms of the larger time frames, yes, I'm definitely bullish, but in terms of the smaller time frames, I'm a little bit hesitant in calling it bullish just yet. We will need to see it break above the around $9,900 zone in order to really call it a breakout like we can see right here. So that's going to be my overall structure for BTC. Let's just go like this, and that's going to be the major breakout zone. And we can see something that occurred similar right within kind of the late February, early March, where this zone right here, I guess you could call it the 89-ish zone, 8,900. That was a previous major market structure low we needed to break in order for it to be bearish in the previous high that we saw right here. And we got to break to the downside. We saw a series of higher highs and higher lows. That was a corrective move compared to the impulsive move that broke the $8,900 zone. And then once we started to see that weakening, we saw a massive sell-off. So around $8,500 is the previous $8,900. So that's going to be my take on it for the next couple weeks at least here. So that would be a really good opportunity if we get something like this, in my belief. All right, now let's talk about some altcoins. We're not really going to discuss anything related to do with the inverse chart. This is up is down, down is up, which is also a good way to kind of gain perspective of a certain pair or price action, because humans tend to have biases either on the upside or downside. If you're making a lot of money shorting things, you're going to have a bias that is more catered towards shorts. If you're making a lot of money longing, or if you're just used to longing all the time, you will have a certain eye for long setups versus short setups. So having a flipped chart can provide some good analysis in my point of view. So this is the small time frame. This is the 1 hour from that triangle there. And I'm not fully short bias, because if we do see this structure, we see a resistance right here at around, let's say, 99 to 10K, and then obviously we see a major level of support at around 85, like we've talked about. This isn't an extremely confirmed descending trend line, but we see an anchor point right here or right here, and then we see our first touch point. If we're able to validate this zone 2, maybe 3 more times, that would then create a squeeze in which, if we're breaking to the upside, breaking this descending trend line, that could be an opportunity to be looking long, because we know this $8,500 zone is a very well respected support. And if we are getting a squeeze, and if we are able to hold this $8,500 level for support, we know that there's a lot of demand in the market, and the fact that we're able to hold multiple times definitely gives me confidence to be able to look to potentially long at this low for the first take profit at this high. And then if it does break, obviously we'd be looking for A, really bullish opportunities, and B, our longer term time frame breakout would be triggered, which would obviously be a very important sign. But as of right now, in the small time frames, we're just getting a nice squeeze with the descending zone and the horizontal zone at 8,500, and then we're just going to see which way it breaks. So that's going to be the structure on the 1 hour time frame for BTC. Now let's look at some alts here. First things first, I did want to talk about XRP as a potential short if it does break the neckline. Now, we did look at 2 opportunities at BTC, saying we don't really want to be looking for shorts unless it breaks 8,500. I'm going to get a little bit of water and then we'll continue on. But what we see here, in my personal belief, is a really good opportunity on XRP here, where we have a nice head and shoulders. We saw the exact same thing right here that we could be seeing right here. So what are we looking for a head and shoulders? Obviously, if you're a trader, you definitely know what the structure is we're looking for, but we're looking for a series of left, right shoulder that is horizontally resisted, and we're looking for a head that is breaking the 2 shoulders, creating a high point, and then getting rejected, creating a lower high. So you see a failure of even the same high breaking. You create a lower high, and then even a lower high, and then you break the key level once, you break the key level twice, and that is your trigger point where you are breaking the neckline. So for head and shoulders, you are looking for a completion of the pattern, which would be a break of the neckline, which is right here. And you're looking for the validation of the right shoulder to hold before you actually actually even call it a potential head and shoulder. Some people like to enter at the top of the right shoulder. I think it's a little bit early. It would be like entering kind of here on XRP. I think that is a decent zone, but you do have a major level of support at around 18 cents for XRP that you do have to worry about if you are short before that key horizontal zone. So that's going to be the structure that we can see: left shoulder, head, right shoulder held by a key level of resistance, and the neckline is well respected as well, which is around 18 cents. So that's going to be the major zone that we're going to be looking at. And then we can see we did break to the downside very aggressively. We did not retest this zone perfectly, but what we did get is a continuation pattern right here. And that's going to be something that we're going to be looking for. Some continuation pattern where you're getting a squeeze, where you see a low, higher low, higher low, higher low, and you see a horizontal zone that is resisting the price from making a higher high. The price has to go somewhere, and it dumps to the downside. You get your initial bearish engulfing candle, if we can delete all that, which is an indication that there is sell pressure coming into the market after the price tried to squeeze up. It got rejected, saying, nope, you are not going above that zone. You are sticking below this because of momentum, and the sellers, the bears, have a lot of control. So something right here, if we do get a dump, would be a potential opportunity for a continuation movement to the downside. Why do we think XRP is a better short than some of the other alts? First thing, we do relative strength, but let's just take a look at the 2-day. I think the 2-day really shows the potential for this head and shoulders. Let's get our snip and then look at the 2 head and shoulders that we saw last time. So first off, let's just talk about market structure. This is a high, this is a low, lower, high, lower low. This on the weekly is just a wick, so this isn't really a higher high. It is still the same high, so we have not created a higher high. It rejected very significantly on the weekly here, and that significant rejection right there was actually that first head and shoulders that we talked about, and this is the second head and shoulders. So this is that first head and shoulders that we talked about, and this is now the second head and shoulders that we currently see within the market. So we got that 29, 30-ish cent range to hold as a resistance, and then we started seeing these lower lows form where we saw low, lower low, lower low, lower low. So in terms of where it could go, it wouldn't be surprising, in my opinion, if we do see a wick actually hit even the like 12-cent range, which sounds pretty unbelievable because we were in that 30-cent range for a while. But for the final capitulation, I wouldn't be too surprised because we are expanding to the downside here, where we're not really able to get a strong base to form, where we're able to create that low. It's just breaking all supports, and it's not looking very favorable for XRP, just in terms of the price action compared to US dollar. But let's look at XRP in another term by comparing it to Bitcoin and actually seeing the comparison to Bitcoin relative to other alts. All right, so this is three different alts, or I guess 4 different alts: Binance Coin, XRP, Link, and Ethereum paired with Bitcoin. And let's just go through them one by one. This is first going to be Ethereum. We see that Ethereum has been making lower lows, but this is a little bit more of a bullish pattern because it broke the descending zone, and we are testing the horizontal support, which is now a new level of resistance, creating some higher lows. So it broke the descending zone, which is more bullish. We did get a little bit of a rally here like we saw. We got rejected on the previous support, which is acting as a new level of resistance, and now we're creating these nice higher lows, trying to break this key level of resistance. So it's looking a little bit more bullish, but there are definitely some other alts that provide a lot more, in my opinion, of a potential quality entry on an alt that will appreciate greater than BTC. BNB is one that, in my opinion, looks tremendous. We got a very tight squeeze there, and then you got a massive move to the upside, another tight squeeze, massive move, and then you got a consolidation where you're able to hold a solid level of support. These are the types of lows that you're looking for. In my opinion, this is phenomenal. You could draw a descending wedge, sort of like this if you really wanted to, but I just drew a nice horizontal base, same as we have right here, where we're holding a nice level of support and we're squeezing, we're tightening the consolidation before the potential next expansion phase. Link, in my opinion, looks probably the best out of all of them. Let's just take out XRP, and Link is this orange one here. We did see a consolidation for a little bit, not really able to make a higher high, but once we broke that higher high, we got a very well-rounded base. We formed a significant move up, making higher highs and higher lows. Now we have an ascending wedge that you could say is a little bit bearish, but I think there's a higher probability of actually melting up, similar to what we saw in Bitcoin's price after the 50% sell-off in early March. We had an ascending wedge that melted to the upside, breaking the resistance, even retesting the resistance as a new level of support before breaking to the upside. So with how strong Link has been compared to Bitcoin, it wouldn't surprise me if we actually do make it back to the upside if the overall cryptocurrency market is able to remain strong. If Bitcoin sells off quite significantly, I think we will see a flood of money come from alts into BTC because it is the most stable, it is the most liquid, it is the longest lasted in all the different cryptocurrencies, obviously it being the first one, and it is most well known, and I think people have the highest amount of confidence in Bitcoin compared to any other alt. So that's my thesis if it goes down compared to up. And then let's now look at XRP, which is the last alt, and the one that we think is least bullish in relative to the different alts that we are looking at. And why do we think that? Well, in that same time frame that we were looking at all the other alts, XRP has been going and devaluing compared to Bitcoin. And you see BNB, you see Link making higher highs and higher lows, making the appreciation for Link and Bitcoin, or Link and Binance Coin, greater than Bitcoin. I'm not saying that they're better investments in the long term, but in terms of price appreciation, they are doing better than Bitcoin. Whereas XRP is not. We are getting a descending wedge, which you could argue is a bullish pattern. Yeah, I do agree it is a bullish pattern like we saw within BNB. This is a descending wedge or a bullish wedge, which is a contraction and volatility to the downside, and then you get these massive expansions in volume, demand, and volatility. So theoretically, yes, you could see that appear here, but in my opinion, looking at the relative strength, not just in terms of alts with Bitcoin, but alts against each other, XRP does not look super strong. And I think that in this case, there's a higher probability of it going and melting down compared to booming back up. And if it does break the resistance, there's going to have to be a key break in this horizontal support, which is new resistance, before we even consider it a potential trade compared to if we're looking at a long for Link or BNB, because for relative strength, Link definitely proves to be one of the best altcoins that are able to sustain significant levels of demand compared to other alts that have similar market caps to them, or even have greater market caps, really. So that's going to be in my analysis on relative strength for these 4 different alts. You can do this with any single alt. I think relative strength is pretty important. But let's now look at some of the other altcoins that we can see. We already went through XRP. Let's now go talk about Ethereum. So I think Ethereum would be best talked about on the 2-day chart first, and then we'd be looking at the smaller time frame. So let's first look at the 2-day chart of Ethereum. We see that there is a nice bottom here at around $100, where we have the first bottom, the second bottom, and now we're getting squeezed with a series of lower highs. This around here is the anchor point. I did draw 2 descending trend lines, and then you have our first major rejection right here, and then you have your second major rejection right there, and then it's just waiting for if we're going to get another move to the upside. We've got another trend line, but we do have a trend line that is from an anchor point right here. Instead of the low, we got an anchor point that's a little bit higher, that is creating a little bit more of a descent on our trend line, which is putting pressure against the current price, which is in confluence with the key structural resistance horizontally. So there is decent amount of sell pressure at around the $200 zone, which is also a psychological zone for Ethereum. So now that we understood the large time frames, let's now jump into the smaller time frames. But the overall structure is still looking bearish. It doesn't look super bullish just yet because the overall sentiment obviously is to the downside. We are getting a squeeze where we have a nice level of support at around $100 to $80, but we're at the high of the consolidation. So the risk reward, in my personal view, is higher if we're looking to the downside compared to the upside. The only time I would be looking for a risk reward to the upside is if we break these major key levels of supply, because that means that there is enough demand to break major resistances to weaken the confidence of the bears or of the sellers, which gains the confidence for the buyers. And I don't see that yet. So I'm going to assume that we are continuing the major long-term trend, which is a consolidation to the downside, creating a series of lower highs. I don't mind if we're going to hold this low until we do see our major move to the upside, which should then kind of be something like this. But until we do get some bullish indications from these alts, I'm going to just trade what I currently see. So let's now go into the smaller time frames and look at what we currently have for Ethereum. Let's go to the 6 hour and something like this. And then let's take a picture yet again and discuss what we see. All right, so we got our major level of resistance around here. 220 was a little bit higher than 200. We can see that it was a previous major market structure support before we broke down. And this is going to be our major level of resistance that we're going to see. And we also have an ascending support connecting the higher lows. We're going to anchor point right at the candle closures. And then we see 1, 2, 3, 4, 5, 6, 7, 8. So we see a lot of touch points where we're getting a series of higher lows connected by a trend line. This is going to be the demand zone where buyers are pushing the price back up, buying that dip, and we're getting a squeeze where you see the buyers buy the dip, continue to drive the price higher, but you also see sellers keeping the price below a certain zone. So now we're getting into a squeeze for Ethereum. If we do break to the upside, it would be a little bit surprising, but in my personal belief, we still do have some space where I don't really want to be too extremely bullish just yet because I want to be cautious, but we do have that space from 220 to around 245, 250 almost. So that is a decent amount of space that we could be looking for an ascending triangle breakout pattern to the upside. But if it does hold this key level of resistance, we could be looking for a pretty decent risk reward trade to the downside. Obviously, having the confluence with the horizontal zone breaking with an ascending zone would be ideal to see. Like if we see a breakout that breaks both zones and then you see a nice consolidation phase, potentially something like this, that would be a phenomenal opportunity that we'd be looking for. But if we don't get something like that, we'll just be very patient. I think XRP looks like a better short opportunity. Well, if we are looking for a long, there are some better opportunities in Bitcoin or Ethereum. Link looks a little bit messy, which we'll talk about right now. I don't really see anything that I absolutely love for Link. Like we talked about, it is a relatively strong alt compared to some of the other alts that we do look at, but let's just draw in that right there. We're just drawing a descending projection zone to kind of illustrate where the current sellers are located, and if the price breaks this zone, we could be seeing a little bit of buy pressure push the price a little bit higher, and we see a nice ascending support connecting the higher lows. So we're getting a little bit of squeeze here on Link, although it's not extremely valid. I don't love the price action. It's not extremely well respected, but we do see some level of a squeeze. I don't really actually see much of a price action pattern on Link. It's just a long consolidation sideways with some wicks to the upside and to the downside. So right now, I don't really see anything I want to trade on Link, so I'm going to stay away, and I'm going to trade structures that provide me a little bit more edge. Last thing we're going to touch on is BNB. So let's go to that chart right now. And what we can currently see is a descending zone that's actually pretty well respected. Let's go to a smaller time frame and then discuss what we currently see. All right, so let's get our snip and then let's play it out. So first things first, the main thing that we're going to be looking for is our horizontal zone of current support, which was a previous resistance, and it's this zone right here. We see that it was a previous resistance and support, and we see, especially with this bounce, that this is a major level of support. We see a lot of wicks to the downside, indicating that there was buy pressure to hold the price at that particular zone, which is very significant to us, because obviously we want to know where buyers are going to be located. We've seen buyers pick up the price not once but twice even before that point, so we know that it's an interesting area within the chart. So in my view, this is the current level of support. We also see some ascending levels of support that did break. We see first touch, second touch, third touch, fourth touch, fifth touch, sixth touch. That broke to the downside. That was a first indication that there's a little bit of weakness, but that's a pretty ascending trend line. Not too surprised that it broke. And then we now see this trend line as well, creating our nice little support. We have initial level of resistance turned a new level of support. So there's a confluence around this zone for demand. There is a confluence for this zone as a demand area, which, if it does break, would indicate that it could be a decent possibility that we could see some sell pressure in the market. Combine this with this descending resistance that's connecting the lower highs, you got yourself a nice little squeeze like so. So if we do break to the upside, obviously that would indicate that there could be more bullish pressure to come, which would have to shift our bias. But if it continues within the squeeze within this descending zone, the horizontal zone, and then if we actually break to the downside, that could indicate a possible short trade that we could be looking for. Although, like I said before, XRP is the alt that looks like it has the highest probability of moving to the downside. So that's going to be my view. BNB, Ethereum look all right, but I think those would be my possible long plays. Link does look it's just too messy. It's just going sideways like this. And then XRP is in a pretty solid structure, in my view, for a short opportunity. And then BTC is looking pretty good as well, although it's just consolidating right now. And like we said before, we're just waiting for the price to either break the 85 level, $100 of support, or break the descending zone. Hopefully it respects it a couple times in order for us to validate that this is a well-respected area that we can use to speculate that the trend will shift. So that's going to be my video for crypto market update for today. Hopefully you enjoyed it. If you have any questions, drop them in the comment section below. Hopefully you had a fantastic weekend, and hopefully you had some good sunshine, some vitamin E, D. I don't know which one it is exactly, but yeah, hopefully you went outside, had some good sunshine on your face, enjoyed time with I guess no one if you're social distancing, maybe virtually hang out with friends or family, but hopefully you had a great weekend. Thank you very much for watching. If you would like a global macro update, we did make a global macro update earlier today discussing gold, silver. I think gold and silver are in some pretty good opportunities. Gold will kind of be the indicator because it's a little bit easier to read, except silver, in my opinion, does look a little bit more bullish in terms of the gold and silver ratio. But if you'd like more information on that, definitely check the previous global macro update where we talk about the precious metals. So thank you very much for watching. We really hope you enjoyed it. If you thought this was educational, informational, entertaining, it'd be great if you would subscribe to our channel. It helps us out a lot. And if you'd like something covered that we normally don't cover, just drop them in the comments, and we'll be able to do it if it does relate to the video. So thank you very much for watching, and until next time, have a good one.